Hi, today I'm very excited to bring to you a new series in my YouTube channel, and it's about digital disruption. The theme of this series, which has multiple episodes, is about how technology is disrupting the world around us and what is happening specifically to multiple industries and incumbent firms around that. This series of, I guess, 7 or 8 videos has two dominant themes. The first theme is how industries are getting disrupted by digital technologies, and here we're going to cover digital PLC, digital life and annuities, digital health, medtech, retail tech, and so on and so forth. And the second important theme is how digital native business models are challenging incumbent businesses in their respective industries, and how is the face off panning out. In today's edition, we are going to talk about how neobanks and fintechs are challenging the incumbency of well established traditional banks. So, this promises to be a longer video than usual, but I think it is going to be well worth your time. So, here goes. Digital Disruption, Episode 1, Neo or Challenger Banks versus Incumbent Banks. Now, what is a neobank? A neobank is basically a fintech which offers banking services without having a branch infrastructure. And there are three predominant archetypes or business models of neobanks, which is the direct banks, digital direct, where banks, traditional banks, actually offer digital services through an app. It's a classical response of an incumbent bank to meet digital disruption. Famous ones in the Indian context are Yono SBI, Digibank by DBS, 811 by Kotak. Very prominent business model, customer acquisition process cheaper, stickiness is higher, and growing rapidly. The second one is a pure digital native challenger bank, where there are no branch infrastructure and they have a banking license and can do everything, can give full stack banking services. Now, digital native banks are not allowed in India given the regulatory structure, but dominant ones across the globe are N26, Atom, VBank, Monzo. It's a very evolving sector and poses a serious challenge to the classical banks. Now, the third archetype or business model is the OTT or the over-the-top banks. Most Indian neobanks fall in this category. They have partnerships with traditional banks and who own a banking license and provide an end-to-end services in their partnerships, like Open, Neo, Tide, InstaPay, Chime, and so on and so forth. These are very well funded banks and have deep pockets, and thereby their ability for spending dollars on customer acquisition is also very high. Now let's look at the multiple business models of these banks. Now here we on the right you see Open Bank, which is a neobank startup established in 2017. It provides a service for micro MSMEs, which is a very small SME. Within the SME stack, the lowest end of the bottom, your milkman, your vegetable vendor, your small kirana shops who transacts with you daily basis, has a subscription with you, needs to get billing, invoices, and inventories done. These mobile first applications actually give accounting, receivables, expense management, and invoicing services, and offers SMEs a business account in partnership with the bank. Open Bank started with one bank partnerships. Today it has 15 partnerships, and with very established banking players like ICICI, HDFC Bank, IDFC First Bank, IndusInd, and so on and so forth. They connect with the bank through something called an API or an application programming interface, which is a software intermediary that allows two applications to talk. So they can actually go back and forth and offer this banking services. Now, moving on, if I look at the kind of sectors that neobank actually engage in, it's quite fascinating. Now, there are two particular playing fields of neobank, if you may. One is the retail sector, the other is the micro MSME sector. The micro MSME sector, we just explained it through our example with Open. Similar, it's called Kirana Tech. Actually, a lot of people eye this sector so that they understand the cash flow, receivables, and offer credit. Typically an unbanked sector, starve for credit, and a huge opportunity for banks. open plays in the space. Similar is Khata Book. These are mobile first solutions which provide cash flow, receivables, inventory, uh, services. And it's a very growing space. And since they are well funded, their ability to stay on the pitch and wait for customer acquisition is also very high. Now on the left hand side, we have the retail neobanks who actually work with the underserved population, new to bank, digital accounts, like this bank Neo, which was established in 2015, caters to 1 million of blue collar customers, and helps customers spend money safely, smartly, and securely. They give financial advice and also runs a financial literacy program and Neo Pathshala to enhance their ability to spend, save, and so on and so forth. Works across the spectrum. Now, Neobank IDFC card is an account, an app, and a card itself. So it's a lot of things bundled into one. The other target segment for Neo kind of these retail bankers are differentiated experiences for banked millennials, where or Gen Z, which is zero marked up forex card, no conversion, transaction fee less forex card, which makes it a very attractive proposition. A neobank like InstaPay works on both sides. They have retail customer and institutional customers. They provide SME the advice and also give differentiated retail services to banked populations. Now, the important question at this point is how, therefore, would we differentiate and how would a bank respond? Now, banks could have a generic response or they could have a specific response. Now, if I want to understand the playing field between a neobank and a traditional bank, what I did is kind of figure out how the traditional incumbent banks are responding through specific strategies and through a set of generic strategies. Now, first we look at the generic strategies. Now, we talked about digital banks of digital offerings of incumbent banks, SBI, Digibank, 811, 30 million users, 35 million users, and 14.5 million users and growing. Basically are giving the same services that a neobank is given, the difference being that this is just an extension of a traditional bank and therefore part of the same ecosystem or the value stream. Classical response works fine. They offer a lot of services. SBI actually works with, gives covering shopping, lifestyle and investments and an entire ecosystem. Digibank DBS is a fully integrated digital system and has seen a lot of traction amongst urban customers. In the next section, we are going to discuss 3 banks and specific strategies. The importance of understanding these 3 strategies is to say that how the landscape of traditional banks are changing under a digital environment. And the choice of these 3 banks have been basis my understanding and, if you say, my affinity and admiration to these 3 banks. Not to say that they are the best banks in the sector or doing some remarkable work. Other banks could be doing equally the same. Now let's look at the first of the 3 banks, and that is Axis Bank. I had the 3 banks. Let's look at the 3 banks in first go. Axis Bank, third largest private sector bank, revenues 56,000 plus crores and counting, 4,000 branches, net interest margin 3.56%, third largest private sector bank. Then we have Federal Bank, 7th largest private sector bank, 1,300, almost 1,250 branches, revenues 11,600 crores. In between is a microcredit institution which has grown up to be a bank, and I absolutely love it, though it has gotten hammered in recent times in the stock market, Bandhan Bank. Now let's go and understand, let's now understand the specific responses of each of these banks. The first one, Axis Bank, third largest private sector bank. Its entire response with digitization has been 3-pronged. Reimagining their customer journey, transforming the core of the operations, and developing ecosystem to extend multiple services to their customers. Now, transforming the customer journey means that 100 journeys, typically 100 journeys have been and before I get in here, this data has been sourced from the bank's digital strategy presentation, December 2020, available in the public domain. Now, coming back to the bank, reimagining customer journeys, it is basically looked at 100 plus customer journeys or interfaces identified the most important ones, simplified it, made it intuitive, and therefore transacting with the bank is like buying on Amazon, if you may. As a result of which, the customer acquisition costs have come down by 26%. Digital accounts in the COVID times has led to 58% of new sourcing for the first half year of 2021, which is pretty remarkable, and therefore it makes sense to go digital because the cost of acquisition comes down, stickiness probably comes down, and I don't know if this is true, but I would suspect the average ticket size also improves. Going on, moving on, the second thing, and we talked about Kirana Tech. Axis Bank looks at the Kirana ecosystem as seriously as the Neobanks do, the Khatabok, the OK Credits, the Open Banks, where they want to be a one-stop solution provider to the neighborhood Kirana or the microcredit provider. Another very, very important, significant step in the direction, and it's not easy for a traditional branch bank-led network to create an ecosystem to attack the lowest end of the micro MSME. So they've done the first pilot, I think in Lucknow, and they are expanding it nationally. Moving on, the third aspect of its transformation is basically transforming its operations setup, which is process transformation and automation using digital technologies like RPA, AI for backend processing, leverage data to enhance control, and a huge number of initiatives for building people capabilities. The third aspect of its transformation has been building an ecosystem. Now, ecosystems are basically an entity of people in the same or a different industry who integrate under a role called an ecosystem orchestrator, where these partners come to provide multiple services to existing customers of the orchestrators or customers of the other partners. In this case, Axis Bank is building an ecosystem to provide multiple services to its customers under one umbrella, and thereby either growing its revenue from commission income or creating customer stickiness. A very, very significant thing to notice. Ecosystems in financial services are expected to drive 35 to 40% of revenues by 2025. So while right now ecosystem revenues may not be so significant, but being early in the game is a very, very important strategy which Axis Bank has identified. Okay. The second bank is Bandhan Bank, and Bandhan Bank, as I told you, is very close to my heart, primarily because of its business and operating model. It has industry-leading cost-to-income ratio, and which is very low. I think 27 to 28%, which is remarkable when SBI comes out with a 53% cost-to-income ratio. However, the negative of Bandhan Bank is its asset quality has been under stress in recent times and has had write-offs during COVID, which is probably understandable from a microcredit institution that it is. Now, what I did is I looked up its Vision 2025 and I recreated this from its annual report. So the source is Bandhan Bank's presentation, its annual reports, and so on and so forth. So what Bandhan Bank aspires to be is a banking ecosystem which partners with its clients on shopping, entertainment, education, marriage, and healthcare. Now, if you look at this architecture, it beautifully draws linkages between the experience layer, which is the outcome of any transaction or process, with the engagement layer, which is how it kind of engages with people and how it kind of interacts with people, which is innovative, end-to-end journeys, partnerships which cater to multiple needs, which creates a positive experience. And the intelligent layer is the use of digital technologies like analytics, cross-selling and upselling using big data, artificial intelligence for credit decision making, digital marketing, to source customers and give them a better experience. So every layer of this entire technology and business blueprint has been thought through very carefully to be able to deliver a seamless experience and a superior banking value across the entire customer life cycle. That is Bandhan Bank for you. Now, moving on, Federal Bank again is competing on equal terms. In this slide, what I want to underscore is 300 APIs available in open banking, which is 300 ways of interacting with multiple systems to deliver a multiple set of services to its customers, and 50 plus fintech partners creating an ecosystem. which is quite remarkable. Their digital transformation is 84% accounts in recent times opened digitally. This data comes from investor presentation of the bank, which is available in the website. Moving on, I'll just allow you to see this. It is again the ecosystem story where the number of APIs and number of different players that the bank has looped in to provide end-to-end services to its customers. So now it's another important discussion at this point in time. It is important to say that, so what? I mean, what does this lead to? What is going to happen between the war between neobanks and incumbent banks? Who's going to rule? Is there going to be a bloodbath? Are there going to be mergers and acquisitions to kind of for some banks to survive? The answers, while are unknown, I have drawn up a few slides to kind of conclude this session, and that is what I'm going to present. These are three themes which I thought are important in terms of what is going to happen in the future. So high performing banks who will embrace technology are likely to defend their position, which is likely to be defend their market share, their CASA accounts, and so on and so forth, and create new markets. Three themes, though a lot of people might not agree, which is the ecosystem play, full stack APIs enabling the ecosystem play, digital offerings, and revamping their customer journeys and reimagining the core. So how do you engage with the customer? How good and seamless and intuitive is your journey, and how well you have redesigned the core to use digital technologies in terms of understanding your customers, cross and upsell. India's regulatory environment is unlikely going to allow pure play digital banks, so which avoids a head conflict between a digital first business model and an analog plus digital model. So that's not going to happen. Therefore, to that extent, a bloodbath may not happen. However, OTTs and traditional banks today are collaborating to provide differential products. But the power of the neobanks will have if neobanks grow powerful, will have the choice of banking partners. So it could choose between ICICI, HDFC, RBL, Yes Bank, or anybody, and probably the banks who have the best technology stacks are going to collaborate with the neobanks, and some traditional banks who are not able to catapult with technology are going to probably miss out. So these are my three themes in terms of the future between neobanks and digital banks. So I don't see a bloodbath happening between the two. I see collaboration possibilities. However, in this process of collaboration, only banks who are very well technologically advanced are going to survive. So this was the first episode of our technology-led disruption series. We're going to come up with multiple videos, so keep watching the space. If you like the content, share, comment, share and comment as you deem fit. And thank you for watching. I for a minute was speechless in terms of saying what would you do next, but I leave it to your discretion. And thank you for watching, and watch the space for more content.